Hey traders, Stephen Kwitzel here with thetradersplan.com. Today we're going to cover why I think it is important to really consider increasing exposure to international stocks, to emerging market stocks, not just in the short term, but we're going to take a long-term view today. Before we get started, if you are watching this on a computer, I recommend changing this to full screen because I shoot this video in full screen and it's just better viewing if you can click the little full screen button. So right now, what we're doing is we are looking at the S&P 500 versus the All-World ex-US Index. So what this is a relative line. So if you follow the black line right here, this is the S&P 500 versus international stocks. And when the black line is going down, it means the S&P 500 is underperforming international stocks. And when the black line is going up, it means it's outperforming international stocks. Now, this is a relative line. So just because the black line is going down and the S&P 500 is underperforming, it doesn't mean that the S&P 500 is losing money. It just means that it is not gaining as much or not performing as good as the world stocks. So I have this big chart that's going all the way back to 2012. And what I do sometimes is I draw trend lines on relative charts because I'm looking for that outperformance, right? I'm looking for outperformance over a specific period of time. So I draw trend lines on these relative charts, and when I have a trend line breakout, I really start to pay attention because as investors, we want to be invested in what is going to beat the market, right? That's how we beat our financial advisors. So what I did right here is I drew the trend line, and you can see that the international, since the black line's down, the S&P 500 is underperforming international stocks. And it really underperformed international stocks from 2002 and even earlier, all the way down to about mid-2008. So emerging markets and international stocks really outperformed the S&P 500, going for a pretty good stretch, a little bit more than 6 years, okay? That's a pretty good trend. Now, when this trend line breaks, that means all of a sudden the S&P is starting to outperform. It's time to pay attention. I always say when something changes, personality changes, trend line breaks, you really need to pay attention. So now it could be a potential shift over to the S&P 500. And it surged up, right? Because I'm sure international stocks were getting hammered in late 2008. And it really kind of created, I'd say, just kind of a surge, but it came down, it found support, it never broke back below that trend line, and it started to turn. So the trend, the long-term trend of S&P 500 underperforming now is going to outperforming. So now you can see that I drew a trend line under this line, and you can see that the S&P 500 outperformed U.S. stocks since, anywhere from, you could call it 2008 to 2010. But look at the trend line. This is a legitimate trend line. It has been touched 1, 2, 3, 4, call it 5, 6 times, okay? So the U.S. stocks has outperformed world stocks 89% versus 15% since 2008. Now, why that's important, if you were just to look at this chart and follow the simple trend line, you would have sold all of your international stocks, or let's just call it ETFs. Let's just say somewhere around here, right? You don't get out right at the bottom because none of us do. But you would have smoked world stocks, right? You would not have had any international ETFs dragging on your portfolio for the last 6-7 years. Well, why I want to show this, so that outperformance is very significant, and I don't have the numbers over here because the ETF, most of the all-world ex-US ETFs started in 2007. So I just ran a quick calculation for this outperformance. Now, why this chart is important, because the trend line broke. And if you can see how long these trends can last, so you had one trend that lasted, it really went back to 2000 to 2008. And then you had another trend that lasted from 2010 to 2007. So really, you have 2 8-year trends, okay? And now this trend is broken. So does it roll over in international stocks outperform over the long term? I personally think so, or at least over the next few years. probably one of the main reasons why this trend line is broken, why international stocks are starting to be strong again, is the dollar's been weak. So typically when the dollar is weak, international stocks, emerging markets, they typically get stronger. So this is something, now why do you care? Okay, so if you're owning, let's say you have a 401k, let's say you have an IRA with a bunch of, just low cost into ETFs, which I do, and I have my wife's IRA and a lot of low cost ETFs. You probably want to now consider shifting some of those dollars over to international stocks, if not most of them, right? Now how much you decide, that's kind of up to you. But if these kind of outperformance numbers hold true over the next 5 to 8 years, and I don't know if this next trend is going to be as long, it could be very significant to your portfolio. You don't want to be in a bunch of ETFs that only perform 15% over an 8-year period. That's not going to get you where you want to go very quickly, okay? So the trend line break is very important, probably because the dollar is weakening, commodities are starting to strengthen a little, but this is something you need to pay attention to. Consider, taking a more international exposure for the long term based on these two trend lines, okay? So let's look at another chart. Okay, so now let's look at the S&P 500 versus emerging markets. And you notice the chart looks a little similar, okay? So I have EEM, the iShares Emerging Markets ETF, versus the S&P 500. So if you go back to October of 2002, all the way to October of 2008, emerging markets outperformed the S&P 500 336% to 49%. So, if you do some simple math, that is what, almost 7 times you would have, if you would have followed this simple trend line rule, right, you could have outperformed the S&P 500 by 7-fold. Now, this is an amazing run, and I'm not saying all of them are going to be, but you can see the concept is very, very simple. You follow the relative trend line, and when the trend line breaks, you really need to start changing your positions for what is looking like it's strengthening. So in mid-2008, it looks like S&P started to outperform emerging markets. And now emerging markets is a lot more volatile than just your S&P 500 or your simple international stocks ETF. So I assume emerging markets, why S&P 500 is really significantly outperforming emerging markets is more volatile and probably got slammed in 2008, okay? But look, it wasn't just a simple trend line break where the V happens, right? It broke, and then it surged, it came back, kind of created this little base, and then started taking off, okay? So, 5 times your money, that is very significant. Now, why is that important? Well, you can see that really S&P 500 has outperformed emerging markets since October of 2010, 89% to negative 13%. Okay, and that's to the end of 2017. Okay, so if you would have just held emerging markets and not followed any of these rules, you would have lost 13% in the last 7 years. So, you would have basically lost 2% every year while the S&P 500 is surging, okay? So again, this is a relative line. The black line is a relative line. So when the black line is rising, the S&P 500 is outperforming. Doesn't mean emerging markets is going down, it just means it outperforming. But in this case, emerging markets really did not do good the last 7 years. Why is this important? Because now you have the S&P 500 relative to the emerging markets trend line broke. Okay, so you have this trend line was touched 1, 2, 3, 4 times. It came down, it whipsawed, and then came back, busted through, and is now rolling lower. Now, what this means is emerging markets in 2017 has been significantly outperforming the S&P 500. So with that being said, I'm not saying we're going to get an emerging markets run like this, where you get 336% in about 6 years. That's just insane. But, I mean, you never know. So you definitely want to be in the strongest ETFs, the strongest indices for that part of your portfolio. And I definitely recommend some long-term money being in some low-cost ETFs. But this is an easy rotation strategy just to really understand what is outperforming each one. So now I was really beating the emerging markets drum, I think, since back in 2015. And it's been choppy, but there really has been a decisive break, okay? One thing I've noticed about emerging market stocks, a lot of the Chinese stocks, I mean, they're selling relative to the S&P 500 at pretty cheap valuations still. So the money is rotating, money managers rotate, and money managers look at valuations more than I do, right? Because they try to find value, and when they're looking for value, a lot of the international stocks that haven't done well, now they're looking to rotate. So you really need to pay attention to these trend line breaks. So this is an actual plot. Now this is the S&P 5 or the emerging markets versus the S&P 500 from 2002 to 2000, the middle of 2008. This is when emerging markets made on their run. This is just to show you how much more significant this run was just by using the trendline strategy. You can see that emerging markets was up 336%. You can see it's pretty volatile too, versus the S&P 500 up 48%. Okay, so again, you have using that trendline strategy, you would have been in the right one, and I'm not saying you would have been in all of the emerging markets. I mean, that would have been a wild, wild ride, but it's just to visualize how important sometimes relative strength charts are, or relative charts are. And then on the flip side, when the S&P 500 mid-2010 started to outperform, you can see the S&P 500 was up 90%, while the emerging markets was down 13%. So, and then they just flipped and flopped. So I hope this was helpful to you, just to kind of show you a rotation strategy, a relative rotation strategy. If you have any questions, feel free to reach out to me. I do look at this every day with my subscribers. So if you're not subscribers, I'm sure there's a dollar trial button somewhere. Let me know if you have any questions. Thank you.